All right, let's get straight to it. We are looking at Strive Asset Management, ticker symbol ASST, which right now at 10:48 a.m. Eastern Time is trading at $1.15 a share. It opened the day at $1.25 and has been in a tight volatile range between $1.09 and about $1.36. This move comes after it closed yesterday around $1.64, so it's seeing a significant gap down and continued pressure this morning. This is not a slow and steady mover. This is a battlefield. And I have to be honest, if you're just tuning in, you're probably thinking about the Strive you've heard about in the news for the last couple of years. The expectation, the common ground, is that this is Vivek Ramaswamy's anti-ESG asset manager, the firm that launched ETFs to compete with the big three index funds, built on a philosophy of pushing corporations to focus purely on profits, not social agendas. You're thinking about their energy fund, their other products, and this narrative of a proxy vote war with firms like BlackRock. That is the story everyone thinks they know. But the reality of what is moving this stock today, the reason for the insane volume and the 52-week range that goes from 33 cents to over $13, has almost nothing to do with that. The reality is that Strive, the publicly traded entity, has undergone a radical transformation. This isn't just an asset manager anymore. This is a high-octane, leveraged bet on a single asset. Forget the anti-ESG story for a second. The new story, the one the market is violently reacting to, is Bitcoin. Strive Inc. has merged, acquired, and pivoted to become a public Bitcoin Treasury company. Its stated goal is no longer just to win proxy fights, it is to accumulate Bitcoin, increase its Bitcoin per share, and actively deploy strategies to outperform Bitcoin. This is not your grandfather's asset manager. This is not a Fidelity brokerage account holding a basket of blue chips. This is a Bitcoin leverage player. And the market action we're seeing is the whiplash from that fundamental change. Let's look at the tape. Just last week, this stock, ASST, exploded. It was up over 90%. Some reports said 110% in a matter of days. Why? Because the market finally caught on to this pivot. The catalyst was a well-known hedge fund manager, Mike Alfred, disclosing a massive stake, calling it one of the most promising Bitcoin treasury plays in the world. This news lit a fire, and the retail crowd, likely piling in through their Robinhood app or SoFi Invest platform, rushed in. We saw options activity that was completely off the charts, with millions of call contracts trading hands on Monday. This is the kind of speculative frenzy you see when a new narrative takes hold. The volume today is still massive, already at 77 million shares, which tells you this is one of the most watched and most traded names on the street. This isn't a long-term investment decision for most people, it's a trade. But today, we're seeing the other side of that trade. The stock is down hard from its recent peak. The expectation was set, this is the next big Bitcoin stock. It's going to the moon. The reality is that gravity exists. What goes up 110% in 3 days often comes down 20% or 30% in one. This is the tension. The shorts are likely piling in, paying astronomical fees to borrow the stock, betting the hype has outrun the fundamentals. And the longs, the true believers, are trying to hold the line, seeing this as a dip. This is a classic high-stakes tug of war. So what is this company really? It started as Asset Entities, Inc., a social media and tech company. Then it completed a merger with Strive, and now, in its latest and most dramatic move, it has acquired Semler Scientific, SMLR, in an all-stock deal. Now, Semler was also a strange story, a medical device company that out of nowhere decided to adopt a Bitcoin treasury strategy, much like MicroStrategy. So Strive has essentially absorbed another Bitcoin-focused balance sheet to bolster its own. The company has stated this move will bring its total Bitcoin holdings to over 10,900 BTC. This is the entire game. The stock price is now, for all intents and purposes, a proxy for the price of Bitcoin, but with a massive layer of operational and speculative leverage. This is a world away from what most people think of as online investing. If you're looking for investment help or a simple way to invest online, you're probably being pointed toward a Schwab Intelligent Portfolios account or maybe a SoFi Robo-Advisor. Those are designed for diversification and self-investing with a long-term passive approach. They might put you in Fidelity ETFs or a broad Fidelity mutual fund that holds hundreds of companies. They'll give you exposure to Apple stock, NVIDIA stock, and Tesla stock as part of a balanced portfolio. That is not what this is. ASST is the polar opposite. It is a bet on a single asset wrapped in a corporate structure that is still burning cash with an unproven strategy of trying to trade and manage that asset to beat the market. It's a bold, high-risk play. If you believe Bitcoin is going to $250,000, you look at a stock like this and see an opportunity for exponential returns. You're not just getting exposure to the asset, you're getting exposure to a team that is actively trying to grow that stack of digital gold. But if you're a skeptic, you see a ticking bomb. You see a company with negative earnings per share, a wildly high valuation based on a promise, and a stock that is being tossed around by retail speculators. You see a company whose entire fate is tied to an asset that itself is one of the most volatile on Earth. A 10% drop in Bitcoin could cause a 30% drop in ASST, or more. This is why you see such a split. On one side, you have traders using the Fidelity mobile app or Robinhood stock trading platform to buy Robinhood fractional shares, just to get a piece of the action. They're in it for the story and the volatility. On the other side, you have sophisticated traders at firms using interactive brokers, looking at the interactive brokers' fees and the platform's advanced tools to short this stock, betting that the recent merger and the Bitcoin stacking narrative can't hide the underlying cash burn. They're looking at the interactive brokers trading platform and seeing an asset that is fundamentally unmoored from traditional valuation. Let's talk about that future outlook, because that's where the expectation versus reality frame gets really sharp. The bullish expectation is that ASST becomes a Berkshire Hathaway of Bitcoin, that they use their expertise not just to hold Bitcoin, but to acquire, merge, and build an entire conglomerate on top of a Bitcoin standard, generating cash flow from other businesses to stack even more. The reality is that this is an incredibly difficult and perhaps impossible task. The alpha they claim they can generate is something few, if any, have ever done consistently. It's easy to say, but it's hard to do. The risks are obvious. First, there's the price of Bitcoin itself. If we enter a prolonged crypto winter, this stock will be crushed. Second, integration. They just mashed 3 very different companies together. That is a massive operational and cultural risk. Third, competition. They're not the only ones doing this. They are chasing MicroStrategy, a much larger, more established player. And finally, there's the regulatory risk, which always hangs over the crypto space. But the opportunity is just as stark. If Bitcoin does become the global reserve asset that its proponents believe it will be, a company that holds 11,000 coins and has a strategy to acquire more is sitting on a gold mine. The question for any investment is, what's priced in? After a 110% run-up, you have to wonder if the good news is already in the stock. Today's pullback to $1.15 suggests the market is having some serious second thoughts. So here's a question for everyone watching. Comment below with your price target for Bitcoin by the end of next year. Your answer to that question will probably tell you everything you need to know about whether you think ASST is a buy, a sell, or something you stay far, far away from. Looking at this, my central takeaway is that Strive, ASST, has successfully executed one of the most dramatic narrative pivots of the year. The expectation was an anti-ESG asset manager, a niche political play. The reality is that they've transformed into a pure play, leveraged bet on the price of Bitcoin, a story that is far more volatile and binary. The market's initial reaction was explosive euphoria. Now, as the stock pulls back, we're seeing the brutal high-stakes reality. This is no longer an individual brokerage play about proxy votes. It's a high-stakes bet on the future of digital assets. And it's not for the faint of heart. This video from Strive themselves, posted back in September, breaks down their acquisition of Semler Scientific and their new Bitcoin Treasury strategy in their own words. It's a key piece of understanding the why behind this entire wild move. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.